Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news markets all quiet ahead of the US Fed monetary policy review and results, which will be announced at 8 a.m. New Zealand time. Markets do not expect any rate change, but given the aggressive start to the Trump administration, markets will be watching for any Fed reaction. It seems unlikely to come today, however. US mortgage applications were a little softer last week through the Washington swamp burp, down 2%. And the benchmark 30-year interest rate stayed above 7% and little changed as lenders reassessed the risk implications. Both wholesale and retail American inventory levels fell in the latest accounting out overnight. But as expected, the American trade deficit rose sharply in December as traders rushed to beat the aggressively signalled tariffs threatened by the incoming administration. That is entirely consistent with what we had reported for the Trans-Pacific freight rates. In fact, exports fell rather sharply too, with buyers pulling back on the risk of capricious American actions. And imports jumped. In fact, they were 15% higher than the same month a year ago. The biggest increases were for food, industrial supplies, and capital goods. Imports of vehicles actually fell. Substituting these for local supply, which seems to be the plan, will probably create distortions that will be inflationary. Air cargo demand ended 2024 on a high too, with a surge in international air cargo to and from North America. And the Fed will be watching for the actual inflation reactions, but they may not show up for a few months yet. But by the time they do show up, the impulse may be embedded already. They have a tough watch and wait and react conundrum ahead of them, well aware that if they get it wrong, Trump will blame them. In Canada, they've already announced their rate decision earlier today, and as expected, they cut by 25 basis points to 3%. They face the same pressures from their neighbour, but from the other side. They are in the unique position of not having a friendly neighbour anymore. They also signalled that they will no longer reduce their balance sheet, so the end of their qualitative tightening program. From here on, their balance sheet will be set to grow at the same rate as their economy. Normalisation there is returning at a much higher level than pre-pandemic. Back then, they had a balance sheet of 117 billion Canadian dollars. Now they're normalising it at $280 billion. In Russia, after some successful 2024 central bank moves to keep a lid on inflation, producer prices are taking off again, up 7.9% in December. The Kremlin pressured backtracking on those moves as having the anticipated impact, and they are heading into a period of high inflation again. In Australia, there were some mixed signals in their fourth quarter CPI data released there yesterday, along with their monthly inflation indicator for December. The Q4 CPI rate fell to 2.4% from 2.5% in the third quarter, and slightly better than expected. Underlying inflation fell to 3.2%, however. But the month inflation indicator rose to 2.5% in December, up from 2.3% in November and up from 2.1% in October. This is actually the highest in 4 months, so tracking the wrong way. Markets, however, focused on the good quarterly result, anticipating this will open the door for an RBA rate cut on February the 18th. But you have to wonder if that is actually how Bullock and her team see it. Markets have reacted very little to the Aussie CPI data, signalling that all the risks are priced in. Politically, some think a February RBA rate cut could mean an April federal election there. The US Treasury 10-year yield is now at 4.55% and down 1 basis point from this time yesterday, awaiting the Fed decision. And the price of gold will start today at $2,752 an ounce and down a minus $6 from yesterday. But oil prices are up 50 cents at just over $73.50 a barrel in the US, while the international Brent price is now at $77.50 a barrel. And the Kiwi dollar is now at 56.5 US cents and down 10 basis points from this time yesterday. Against the Aussie, we're 20 basis points higher at 90.8 Australian cents. Against the euro, we're little changed at 54.3 euro cents. That all means our trade-weighted index starts today at just under 67.1 and also little change from yesterday. And the Bitcoin price starts today at $101,997 and down a minus 0.3% from yesterday. Volatility over the past 24 hours has been modest at plus or minus 1.4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.